Welcome to the Deep Dive, where we cut through the noise and get straight to what matters. Today, we're plunging into an economic puzzle that's been making headlines. Inflation is slowing down, which sounds like fantastic news, right? But here's the twist. Prices themselves are still very much on the rise. So what does this fascinating paradox actually mean for the Australian housing market, especially when we talk about affordability, and are we finally seeing some much-needed relief on the horizon?
Yeah. Look, to unpack this, we're pulling from a stack of crucial sources today. We've got the latest data from the Australian Bureau of Statistics, the ABS on inflation, their detailed producer price indexes, and of course those all-important building approvals.
Okay.
And we'll also be leaning on the sharp economic analysis from Cameron Kusher, a respected economist at view.com.au. His insights into the property market are, well, highly valued.
Great. So our mission for this deep dive is clear. We want to unearth the pivotal insights hidden within this data, truly understand the powerful forces shaping the Australian housing market, and decipher what this recent surprising jump in building approvals actually signals for you as you navigate your future plans. Let's get into it. So let's kick things off with the big economic news. We've had confirmation from the ABS that the rate of inflation has continued its downward trend.
That's right.
What does this mean for us, and maybe more importantly, what's the market's current read on the Reserve Bank's next moves? Are we seeing expectations for interest rate cuts, and if so, how's that timeline shaping up?
Yeah, that's the billion-dollar question, isn't it? The headline inflation rate, it's now sitting at 2.1% over the year.
Okay, 2.1.
And what's significant about that is it's actually below the RBA's specific 2.5% annual inflation target.
Right.
And it sits comfortably within their broader historical target range of, 2–3%. So this positive shift, it strongly suggests the RBA will reduce official interest rates. Probably by 25 basis points. That's 0.25% when they meet next week.
Okay, just 25 points next week. And it sounds like the market is already anticipating quite a bit more movement than just that initial cut.
It certainly is, yeah. The consensus is a 25 basis point reduction next week with expectations for 2 more 25 basis point cuts later this calendar year.
Right.
And then possibly 1 more in early 2026. So a series of cuts expected.
Now, this brings us to a really crucial nuance that I think often gets missed. While the rate of escalation of inflation is slowing, prices are in fact still climbing.
Yes.
We're not talking about prices actually falling, are we?
No, that's absolutely right. It's a key distinction. What we're seeing is the speed at which prices are increasing is decelerating, but the prices themselves, they're not dropping. Yeah. True deflation, where prices actually fall. I mean, it sounds great to a consumer, doesn't it?
Yeah, you'd think so.
But it's generally considered economically undesirable. If you expect prices to drop further next month, you delay purchases.
Right, you wait.
Exactly. And that kind of widespread hesitancy can really cripple an economy. So while most households would absolutely welcome lower prices, we're not heading into a period of actual falling prices, just a much slower climb.
And this isn't just abstract economics. It hits your wallet directly, doesn't it? That persistent harm from high inflation over recent years, especially with wages, well, lagging behind. It means your purchasing power still feels stretched, even if the tightening grip is finally loosening a bit. So we've talked about the broader economic climate, but let's zero in on where many of us feel it most directly. The cost of building a new home. That's been such a hot topic.
Yeah.
How do these wider economic trends specifically impact what it costs to, put up new housing?
Well, that's where the ABS producer price indexes, the PPI, come in. Think of it as a look behind the curtain. This data tracks price changes and what it costs to make things, materials, services involved in production. It gives us direct insight into housing construction and material costs. And look, over recent years, we've seen a massive surge in the cost of building homes in Australia.
Right.
And this has led to 4 key impacts.
Okay, what are they?
Well, first, new housing became significantly more expensive. That naturally widened the price gap with existing homes, making new builds maybe a less appealing option for some.
Got it. More expensive than established homes.
Second, those higher interest rates we just discussed, they dramatically increased financing costs, both for developers trying to get projects off the ground and for potential buyers. And this really dampened both demand and critically supply.
Okay, so costlier finance hits both sides.
Exactly. Third, persistent labor and material shortages, a lingering legacy of the pandemic.
Still feeling that, yeah.
Led to a sharp decline in overall construction activity and, frustratingly, much longer completion times. Just took longer to build anything.
Right, so delays on top of costs.
And finally, number 4. Because new housing typically relies on a certain level of pre-commitment to purchase.
You mean like buying off the plan?
Precisely. Buyers often sign contracts, pay deposits before it's built. So those higher costs for buyers, coupled with the increased finance costs we mentioned, it directly squeezed new housing supply because fewer people were able or, frankly, willing to commit that far in advance under those conditions.
Okay, so a pretty challenging picture for new builds over the last few years. But now it sounds like there's actually some encouraging news from the latest construction cost data.
Yeah.
Maybe signaling a potential turning point.
Yes, that's right.
That must be a welcome relief for the industry.
It absolutely is. We're seeing some promising signs. Annual house construction costs, for instance, they fell to just 0.3% growth.
0.3, wow.
Yeah, that's the slowest rate we've seen since December 2019. So really bottoming out. For other residential, that's your medium to high density housing, apartments, townhouses.
Right.
Annual construction costs grew at 3%. Now, while that's still above the overall inflation rate, it's the slowest growth recorded for that category since June 2021.
Okay, still an improvement there too.
And perhaps even better, annual housing material costs grew at a modest 1.6%.
1.6.
Which is well below the current rate of inflation, and it's actually in line with the results we saw last December. So material costs seem to be stabilizing somewhat.
Okay, these figures definitely show the escalation is easing, which is good news. But we need to keep in mind the bigger picture here, right?
Absolutely.
These costs are still dramatically higher than they were, say, 5 years ago.
That's a crucial context.
We're talking housing materials up, 34.5%?
Yeah.
House construction up a staggering 42.1%.
Yeah, huge increases.
And other residential up 28.7%. These increases have far outpaced the overall 26.2% inflation over that same 5-year period. And ultimately, these increased costs are typically passed on directly to you, the person buying that new property.
That's the reality, yes.
So with the economic tides finally turning a bit on costs and interest rates, the big question has been, will the construction industry actually respond? And now we're seeing what some are calling a surprise spike in building approvals. This data is notoriously volatile month to month, we know that, but could this finally be the shift we've been waiting for?
It just might be. Look, we saw a really exciting jump in June 2025. Dwelling approvals reached 17,076 for the month.
17,000. That sounds high.
It is. It's the highest monthly number we've recorded since August 2022.
Okay.
And what's particularly noteworthy is that the increase was heavily driven by other dwelling approvals, those apartments and townhouses we mentioned.
Right, the higher density stuff.
Yeah, they were up a massive 86.6% from the previous June.
Wow, 86%.
And hit their highest monthly volume since December 2022. So a really big jump there.
Okay, 1 month can be a blip, but if we smooth out that monthly volatility and look at the annual picture, does the improvement hold up?
It does, yeah. The annual view really shows a clearer improvement. Over the entire 2024-25 financial year, 187,333 dwellings were approved for construction.
Okay, 187,000.
That's a 10.2% increase compared to the previous financial year.
Right.
And it's the highest annual approvals figure we've seen since January 2023.
So a definite upward trend over the year.
Breaking down further, house approvals specifically were up 7.9% year on year to 112,483. Highest since Feb 23.
Right.
And other dwelling approvals reached 74,849. That's 14.2% higher than the previous year, and again, the highest since January 2023. So broad-based improvement.
These numbers definitely sound promising for increasing supply, which we desperately need. But they immediately bring to mind the federal government's ambitious National Housing Accord target.
The big target.
They're aiming for 1.2 million new homes over 5 years, right? From 2024-25 to 2028-29.
That's the one.
Which breaks down to 240,000 new dwellings each and every year. How do these current approval numbers stack up against that target?
Yeah, that's the critical context, isn't it? While these latest figures are encouraging, current approval numbers are still well behind that very ambitious target.
Right, 187,000 is a fair way off 240,000.
It is, and it's crucial to remember that not everything approved actually gets built. There's always attrition.
Okay.
So to even hope to hit that 240,000 home completion target, you would actually need more than 240,000 approvals annually to account for drop-offs.
Right. Need a buffer.
Exactly. And the expert analysis, like from Cameron Kusher, suggests that this target was, quote, never thought achievable.
Really? Never achievable. Why?
Well, Not just because of the raw numbers, but due to persistent systemic bottlenecks. Things like skilled labor shortages, which are still a big issue,
Hmm.
complex planning processes in states and territories, and infrastructure capacity, roads, water, power. These things simply can't be fixed overnight to support that level of building.
Okay, so systemic challenges remain.
They do. However, looking ahead, and it's an important if construction cost escalations remain moderate, as they
Yeah.
seem to be doing,
Yeah.
and interest rates fall as expected by the market,
Right.
we certainly anticipate a likely lift in dwelling approvals, commencements, and actual construction activity. The conditions are becoming more favorable.
So the core message here seems to be that a continued turning point in the construction cycle is a really welcome development, especially when we consider how rapidly housing prices and rents have increased in recent years.
Absolutely welcome, yeah.
But some might argue that these shifts are maybe too little too late, or perhaps that other factors might still derail this recovery. What's your take on that skepticism? Is it warranted?
Look, that skepticism is understandable given the scale of the challenges, especially around affordability. But the reality is, more supply is absolutely imperative. It's fundamental. These shifts, this uptick in approvals, the easing cost pressures, they were a positive step towards alleviating future price rises. And crucially, ensuring our housing stock actually grows in line with Australia's rapidly expanding population. That link is vital.
Right.
The hope is certainly for a greater volume of new housing to be delivered over the coming years. This will be a key component, not the only one, but a key one in improving overall housing affordability.
So not a silver bullet, but a necessary piece of the puzzle.
Exactly. It's not a silver bullet, but it's a vital part of the solution. We need more homes built.
Okay, so as these economic currents shift and housing supply begins to respond, albeit slowly, what considerations might this new landscape present for your future plans? Whether you're thinking about buying, perhaps renting, or simply navigating this changing housing market, something to ponder.